Welcome to this week's look at the state of the New York City real estate market. This is for the week of January 1st to January 7th. We're going to get started with the luxury market. We're going to then move to the Manhattan market and the Brooklyn market. And then I'm going to give you my thoughts and my takeaways, my recommendations for buyers and sellers. And I will say that even though we're very early in the year, it is already shaping up to be a very interesting year. So, any questions, please post them below. You can always reach out to me at Sotheby's. But for now, let's just get started. There were 17 contracts signed in the luxury market. These are for properties that are priced at $4 million and above. 3 of those properties were priced in the trophy category, meaning $10 million and above. 12 are condos, 4 were co-ops, and 1 was a townhouse. 11 of these properties were uptown and 4 were downtown. The number 1 contract for last week was 69E at 217 West 57th Street. They were asking $24.5 million. This apartment has nearly 11-foot ceilings, 3,364 square feet. It includes 3 bedrooms, 3.5 bathrooms. It has a great room that faces north and east with views of Central Park, and the other rooms face east and south with city views. This is in Central Park Tower. It's a 1,550-foot skyscraper. It has 179 units. It has over 50,000 square feet of amenities that include an indoor and an outdoor pool, a fitness center, a children's playroom, a club room with a ballroom, a bar, dining facilities, and a cigar lounge. This building started marketing in 2018. The number 2 contract is a building that we have talked about a lot in 2023. This is 40W at 50 West 66th Street. It was asking $16.5 million. This is a condo that has a little over 2,800 square feet. It has 3 bedrooms, 3.5 bathrooms. It has a 24 by 22-foot great room that faces Central Park, and it opens up onto a 139 square foot loggia. Amenities in this condo building include doorman, fitness center, indoor lap pool, an outdoor saltwater pool, plus a jacuzzi, basketball, pickleball courts, screening room, game room, bike room, and my personal favorite, a dog washing facility, which again, I marvel at this. I cannot figure out why they would even bother to have something like that in a building like this, but okay. The closings in this building haven't even started yet, but they are going to start sometime this year. Okay. That is it for the number 1 and number 2 contracts. We're going to talk now about the stats for last week. Total weekly asking price sales volume, 141,080,000. Average asking price, 8,298,824. Median asking price, 5,995,000. Average discount from original ask to last asking price, 5%. Average days on the market, 737. Now, as with these number 1 and number 2 contracts that were signed last week, many of these luxury properties are new development properties, and those take a while to sell. So that's why you get the average days on the market being so high. All right, that's it for the luxury market. Any questions, please post those below or reach out to me at Sotheby's. I am going to shift over now and take a look at what is happening in Manhattan. We're going to start, as we always do, with Manhattan's 1-week look at the supply, the contracts signed, and the off-market. We see all 3 categories popped a bit. Supply popped a lot for the week, up 350% with 171 properties coming on the market. Contracts signed also popped almost 31%, and the off-market properties also rose almost 159%, 287 for the week. However, if we back up and take a look at the 1-month view, we see that the supply is actually down over 51%, 415 for the month. Contracts also down at 608, down about 18%, not terrible. And the off-market properties, 851 for the month, down almost 7%. The market pulse is no surprise. We continue to be in this buyer's market. This is a long, very protracted buyer's market. This has been very, very rough on the sellers. We're going to get into that in a little more detail in a few minutes, but for now, we're going to take a look at this liquidity pace chart, 608. This is the 30-day moving window, contract activity. We are definitely in a low liquidity environment in Manhattan, not a huge surprise here. The supply dips to its lowest level in over 5 years. And again, this is a time of year we would expect to see low inventory. We're going to continue to see low inventory probably until the end of this month. If we look at the new listings, we definitely saw a pop over the last week, but we're still very short on inventory. The demand remains at lower levels, but it is basically above where we were from last year. The liquidity pace for 30 days remains at low levels, but it is above where it was last year. So perhaps that is a positive sign. We're going to have to continue to keep an eye on this and see how things progress. If we look at the contract activity for the weekly deal volume, it was 3% higher than it was last year at this time. Perhaps we have kind of hit the bottom and we are now beginning to rebound a bit. This chart is the latest reading of resale condo price per square foot by contract signed. It shows October deals attempting to rise above the lows of September, and again could well be an indicator that we have kind of hit the bottom, so to speak. That's it for Manhattan for the moment. I am going to give you some additional thoughts about where the Manhattan market is, but for now, let's take a look what's going on in Brooklyn. The Brooklyn supply for the week was up 200%, a little bit of a pop, just as with Manhattan. 141 properties came on the market. Also, contracts popped a little bit, up a little over 26%, 87 contracts were signed, and the off-market properties also rose 195, up over 261%. If we look at the supply for the month in Brooklyn, 370, we are down almost 40%. Contract signed 409, down almost 21%, and off-market properties 400, up 32%. Just as with Manhattan, we are in a buyer's market. In Brooklyn, we have been, we continue to be, and if we look at the liquidity pace chart for Brooklyn, this 30-day moving window, 409, we continue to be in a low liquidity environment in Brooklyn as well. If we look at the supply for Brooklyn, just like with Manhattan, it remains quite lackluster. Although there is some thinking that the mortgage rates may unlock some of the inventory as January goes on. We're going to have to keep an eye on that. It's a quiet week for new listings in Brooklyn. It's in line with the overall downtrend in Brooklyn's supply, but it's somewhat expected given this time of year. The Brooklyn 30-day liquidity pace remains below average. Of the previous 3 years, buyers seem to just be staying on the sidelines in Brooklyn. This has not been the trend the last 3 years, but we definitely saw that this last year could have been the higher interest rates. We really don't 100% know, but certainly that is what we saw. And the contract signed, the weekly deal volume was light, but it was a holiday week and typically quiet month, just to be expected. This chart takes a look at the Brooklyn market pulse. It's a seasonally adjusted measure of leverage. It suggests that the market may have found a floor and it does not seem to be falling further. The supply is low. So any uptick in demand may cause the buyer leverage to deteriorate. This has been a market where the buyers have really had a lot of leverage. We've been talking a lot about that. I've been talking a lot about that, but how much longer that's going to continue to go on really remains to be seen. As I've said often, nothing lasts forever. So looking at this chart, it's kind of interesting. We're seeing that at this point, things are holding steady. So will be very interesting to see as we've turned the corner now going into 2024, what kind of leverage the buyers will continue to have. Okay, that is it for Brooklyn. I'm going to shift now. I'm giving my thoughts and my takeaways and my suggestions, recommendations for buyers and sellers. So there were 17 contracts signed in the luxury market. This is for properties priced at $4 million and above. 3 of those were for properties priced at $10 million and above. 12 were condos, 4 were co-ops, 1 was a townhouse, 11 were uptown, and 6 were downtown. That's definitely an increase from the previous week. In the Manhattan market, we saw a slight pickup in supply for the week, but the inventory is still heading down. This is the lowest inventory we've had since the end of 2016, beginning of 2017. We saw a slight pickup in contract activity for the week, although this is still a very low liquidity environment. If we think about this from a market pulse standpoint, this is a long duration buyer's market. Now, how long that's going to last, we're not exactly sure. We seem to be seeing some indicators that from a price action standpoint, the latest stats would suggest we may have hit the bottom. The prices seem to be down by roughly 10% since their April peak. The sell side listing climate we know has been very challenging, and the seasonal activity to rise, let's say beginning probably in February. What does all this mean? If you're a seller, if you are not currently on the market, know that March historically is your best month to list. March, April, May are the active months. And if you are on the market then, or really any time, if you don't get your deal done in the first month, it's your price. So be sure that you don't waste a lot of time thinking it's something else. Adjust your price. And if you're currently on the market, work with buyers. Try to get your deal done. This is not a market that's really in your favor. So if you are getting offers, be sure that you are trying to pay attention to those. And if you're able to work with the offers that you're getting, meaning you can work with those numbers, then try to do so. Try to get your deal done. Time is not your friend. The longer you sit on the market, the less your property is worth in the eyes of the buyers. Buyers, this is your moment. Know that your opportunity may begin to diminish after the next few weeks once more inventory starts to come on the market and as activity begins to pick up. Expect, at least for the moment, that the inventory that we have is what you have to choose from. So if this isn't working for you, then you may just have to wait. If it does work for you, then start making offers, because this is definitely a great market for you to be having leverage and to be trying to squeeze out whatever this market will hold for you. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I will be back next week with the very latest news about what's happening in the New York City real estate market. In the meantime, take care.